The information provided in this program is of a general nature and is not intended to be personalised financial advice. We encourage you to seek appropriate advice from a qualified professional to suit your individual circumstances. Banks beware. Financial app Revolut launches in New Zealand today and it wants your deposits.
We think the incumbent banks have had it too easy for too long.
And if you've missed out on this year's bull market, is it too late to buy in? ANZ's asset allocator thinks the hype won't last.
A lot of our sentiment models are sort of flashing warning signs at this stage.
It's Monday the 3rd of July and you're watching Markets with Madison. "26,000 New Zealanders have signed up to open an account with Revolut starting today. It's an app that allows people to spend, save, transfer, exchange, and even invest their money. Here's how it works. Revolut's mission is to simplify all things money. Operating like a normal bank account, you can put your money into a Revolut account on the app, hold it in a choice of currencies, and withdraw at any time. You can budget on it by separating savings from spending, split bills with other users, and transfer money to and from Revolut accounts anywhere in the world instantly. The app charges no fees on transfers between Revolut and other New Zealand bank accounts, and no fees on foreign exchange. However, cross-currency transfers to other banks does attract a brokerage fee, but that money doesn't go to Revolut, and it doesn't offer interest-bearing products like loans. So how does it make money? Well, it's a subscription-based service. New Zealand customers will be able to sign up for free on a standard plan to start. But later this year, there will be paid options. Prices are TBC, but in Australia, the most premium account option, with discounted fees and larger withdrawal limits, costs 25 Aussie dollars. Across 40 countries, 30 million people use Revolut. It processes more than 400 million transactions every month. It was started in London in 2015 by two entrepreneurs, one Russian and one Ukrainian. In an $800 million funding round in 2021, the fintech was valued at £33 billion. But investors have started writing it down since then, suggesting it was overvalued. Revolut is a modern threat to banks, and there's clear appetite for it. For example, Apple's high-yield savings account for Apple Card users brought in almost $1 billion of deposits in its first 4 days this year. The shift could be explained by the incumbent banking system proving unstable. Just this year, we've seen a handful of bank collapses in the US and Europe's UBS swallow Credit Suisse. Revolut's New Zealand chief executive, Matt Baxby, says while it plays in the same space as banks, it doesn't face those same risks. Matt, thanks so much for joining us. Good to have you in New Zealand.
It's fantastic to be here, thank you.
Is Revolut a bank?
Not a bank, but provider of financial services to people, and probably where we're different maybe to the incumbent banks is really bringing technology to bear. So, enabling people to manage their entire financial life in one place. That's our app, and bringing the services that we think are kind of really valuable in New Zealand.
If you don't call it a bank, what should Kiwis call it when it does launch here?
Yeah, we're a fintech, so that's really where the company's come from, and I think the service itself is, we think of it as a financial super app, a place people can manage their entire financial life in one place, and we're really excited about kind of what's coming to market. We think it's got real breadth and real appeal to New Zealanders. So whether that's as travellers, we think it's a fantastic travel companion service, being able to exchange foreign currencies at the real exchange rate, spend in over 200 currencies abroad using a card, or even transfer peer-to-peer to anyone globally. We have 30 million customers across the world. So yeah, we think there's some great features there.
In Australia, you also allow your customers there to trade things like crypto and US ETFs and stocks. Is that something that's going to be on offer here?
Well, over time, so we're coming to market with a proposition around being able to hold and exchange foreign currency, send peer-to-peer, manage your financial life in terms of budgeting and financial tools. And over time, we want to build that proposition out. So as you say, in other markets, we've offered things like cryptocurrency or share trading. We think those would have real application to the New Zealand market and something we're excited about bringing in the future.
You do plan to compete with banks though, do you not, to win over some of their customers onto Revolut?
Absolutely. You know, one of the things we looked at really closely in the build up to coming to market in New Zealand was where was the unmet need for New Zealanders, and you know, we think the incumbent banks have had it too easy for too long. You know, I think the customer, the digital experience that they offer, you know, can be improved on, and including the value that's actually offered as well. Typically, we see really high fees in the market. So you take something like foreign exchange, where often the banks will attach a markup of 3 to 4% to, you know, foreign currency exchange.
If they offer it.
If they offer it at all, exactly. Whereas with Revolut, it's 0% commission, and you know, again, being able to really control your money and offer that great digital experience.
What exact type of customer in New Zealand are you really trying to go after? Because a lot of people here, we don't really have many fintech options. People here have pretty great relationships with their banks, especially because we have this obsession with property and a lot of people have mortgages. So who are you really going after and hoping to transfer over onto Revolut?
Yeah, I think we think the product's going to have really broad appeal. So one aspect of that is travel. You know, we know New Zealanders are prolific travellers, real global citizens. I think there's many cities I've been to where there hasn't been kind of Kiwis on the road. So I think that has really broad appeal. But I think overall, you know, when we've done research into the New Zealand market, I think we did some proprietary research that suggested 98% of Kiwis wanted a way to have better visibility and control over their money. So that gives you a sense that there is really broad appeal to the type of offering. You know, we naturally skew a little bit younger because people tend to, you know, of a younger demographic, manage their life through their phone, and that's obviously one of the key benefits that Revolut bring. You know, being in control of your money via the app.
You've had a wait list for a while. How many New Zealanders are currently on that list?
Well, I think that's what's really surprised us on the upside in a lot of ways. 26,000 New Zealanders have signed up, and that's really been by word of mouth. I think they've heard Revolut's coming. You know, we've taken the time to really understand the market and get our services ready to offer. So yeah, looking forward to releasing that wait list and bringing New Zealanders onto our platform.
If Revolut is not a bank in New Zealand, what regulations do you come under? Any?
Yeah, so we, you know, again, we you know, hold ourselves to the highest standard in terms of compliance and licensing and getting that type of thing right. And one of our priorities is making sure people's money is safe. It's kind of a hygiene that you need to offer as you come to market. So, you know, for every dollar of funds that we hold, that's held 1-for-1 with a local institution in New Zealand. We're registered as a financial services provider in the local market. We comply with all of the AML and KYC legislation. That's obviously something that's super critical as well. So yeah, absolutely, you know, abiding by all of the requirements that we have from a regulatory point of view, and yeah, that priority of really keeping people's money safe as well.
But you're not necessarily regulated by, say, the Reserve Bank of New Zealand?
No, not in the same way that the banks are.
And is that held with another New Zealand local bank?
It is, that's right.
Can you tell us who it is?
Yeah, it's ANZ, so their local institutional banking division we've worked with. That gets us access to the local payment rails and the like, and obviously that's where the client money is stored.
Interesting that New Zealand's biggest bank would team up with a fintech if you're going after their customers. Should banks be worried, and are they? What sort of feedback have you had from them on this?
Well, overall, I think you know, we've been welcomed, I think, by the ecosystem in New Zealand overall. So whether that's, you know, our engagement with FinTech New Zealand, with the local regulators, and indeed the local banks and other fintechs, I think by and large people recognise that Revolut brings something different to the market, and often things like you know, the digital experience that we offer, you know, our heritage in foreign exchange and enabling people to spend their own money abroad and send that own money abroad, they can see that they're services that may not have been offered in the same way in the New Zealand market. So we found we've been embraced as we've approached the market. We've really been buoyed by the reception that we've had, and yeah, I think overall people can see the benefit that Revolut is able to bring to the market.
Well, congrats on the launch and keep us posted on how it goes.
Great, Madison, and yeah, thanks for having me along today.
At the beginning of this year, we were told by many experts to position our portfolios defensively. But our defensive NZX 50 index is pretty much flat year to date, while US markets are off to the races. So if you haven't already, is now the time to rethink your positioning. Maaike Van Tol is ANZ Investments Head of Asset Allocation. Hey Maaike, thanks for coming on the show.
Yeah, thank you for having me.
Defensive was meant to be the 2023 play, but our defensive NZX 50 index has barely grown this year. So why have we missed out on this year's rally?
Well, I think that's really the story. When we came into this year, everyone was very pessimistic. We've been through a very tough year last year with central banks raising interest rates very rapidly to try and get inflation under control. And so far this year, it's actually turned out much better than expected. Labour markets are still strong. Growth is holding up pretty well. Consumer spending, especially overseas, is still fine. And so I think it's really that story that people were super pessimistic coming into this year and things are actually looking a bit better than expected.
How is ANZ Investments positioned now compared to at the beginning of this year?
Well, we're still positioned reasonably conservatively because we personally don't think that it's possible to raise interest rates at this pace and not see some sort of impact somewhere down the line. So we're reasonably conservatively positioned. There's also been a big change over the last year. We recently updated our capital market assumptions, which gives us sort of a forward-looking projection of what we expect returns to be. And the returns on the conservative fund now is the same as the returns on the growth fund last year. So this incredibly rapid tightening cycle has led to much better returns going forward for bonds. So that calculus has also changed. I mean, to talk about a couple of years ago, people were saying, there is no alternative, Tina. You had to invest in stocks because bonds were so out of favour. Well, that has changed now.
So overall, ANZ Investments is conservatively positioned. Have you made any effort to allocate customer funds into those high-performing growth assets this year?
No, we're leaning against that a little bit. A lot of our sentiment models are sort of flashing warning signs at this stage. I think this year there's been a couple of things that have happened. First of all, there's been a lot of optimism around AI, which we do think will be very useful over the long term, but maybe in the near term it's a little bit of overexcitement there. Europe obviously has done better than expected because people were expecting a recession on the back of, the energy shortages that were likely to play out over the winter. The winter hasn't been as severe, and so I think there's been a bit of optimism there as well. And there's also been optimism around Japan, sort of the Warren Buffett halo effect, and so there's been a number of different things that have played out that have been better than expected. But we still see better value in bonds and slightly less value in equities at this stage.
So your thinking is that if you weren't in any of those higher risk growth assets late last year or at the beginning of this year, it's too late to get in now?
I think that's a fair to say.
Let's talk about bonds. They seem to be having a less dismal year than last year too?
Yes, absolutely. I mean, last year, most bond markets were down 10% or more, which is almost unheard of in that market. This year, the broad index are up 3% year to date, which obviously isn't as good as the S&P 500, but is still much better than last year. And it's more the starting point for yields that are much, much more attractive. Many central banks have said they're close to finishing their hiking cycles. The RBNZ have said they're going to pause and wait and see. And so we think the amount of tightening that's still to come is a lot less now. And the entry point is much better now for bonds.
I guess this year we have some certainty, right, compared to last year where we had pretty much absolutely none. How much does this certainty make your job?
It makes what's particularly good is the fact that bonds are going to give you a better return going forward. So there's a better balance there than what we've seen right after the COVID crisis when bond yields were 0.5, 0.6% in many different countries. So very, very low. So that's made life a lot easier. I think the key uncertainty now is with the rapid tightening that has happened. We've seen some stresses in the US banking sector, earlier in March this year. We're just keeping a little bit more alert as to what that could mean going forward. In the early 90s, there was a savings and loan crisis where a number of different banks fell over. And so when central banks raise interest rates very rapidly, it's likely to have some impact along the way.
Thanks, Maaike. Appreciate your time.
Thank you.
We are well and truly past the halfway mark for this year. So I want to know if you are bull or bear on 2023's rally. And are you going to open a Revolut account? If you do, let me know how that process goes for you. I'm interested to know. Now go put your money to work. Thanks for watching Markets with Madison, the New Zealand Herald show for interested investors. If you want to stay up to date with financial markets, click the subscribe button below and you can watch our other episodes here. Stay up to date with all the business news and numbers as they land on nzherald.co.nz.